Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So it is Wednesday, last day of the month. So it started off interesting, right? We're up 3-4 handles, and literally within, 20 minutes, we went from up above yesterday's high to back below yesterday's high to a lot of things going from green to flat to red, and then even some breaking the upper flags and stopping out a lot of people that might have been uncommitted like me. I had like 6-7 longs coming in. Right away I'm tweeting at Redler All Access, out of Facebook up 70 cents, out of 2/3 selling some snaps, selling a little Twitter, still in this, adding to Apple, et cetera, et cetera, et cetera. And then all of a sudden things started to unravel and you had to really, pretty much manage your positions fast. So I would say by, 10 to 10, 10 o'clock, I was pretty much out of a lot of my longs. Why? Because when something opens up a prior high above it, I usually sell some. Why not? Book little profits. Goes back below a prior high. What do we talk about? That means the momentum is not staying there. And if you're playing for momentum, then you could also sell some. And then once something goes red, you never know how far down it's going to go. So if it goes red, you might as well sell it or sell more and then wait for a pivot low. It could be a 15, a 30, or a 60. So at least the market did some price discovery. You could re-enter lower, versus the level, and then you're calculated. That's pretty much how it happened. I think by the end of the first hour, market put a low in. So if you got stopped out and sold strength higher, you were able to buy some things near the 8-day or the 21-day or the 50-day, whatever it was your style is. But I would say it was definitely not an easy day. A lot of the sectors that have been weak, like the banks, the small caps, energy, the bios, all giving you signals that they're going from bent to broken, and then here you have the S&P 10 handles away from a high, and high beta tech trying to continue higher, but a move down like that gets you a little worried because all of a sudden, who knows, what if the 8-day doesn't hold? It could be the 21-day, and that's a lot lower, and for an active trader that's hard. So anyway, by the end of the day, all the buy programs kicked in, maybe some of the dressing of the windows for the last day of the month. So tomorrow I guess will be an interesting day. I'm pretty flat-footed, though. I got out of the majority of my longs. I've been in 7, 8, 9 positions for about a week and a half. If you go to the chart, pretty much ever since this red dog reversal right here, I started to rebuild my portfolio again. I got stopped out of most of my positions right here like everyone else, right? When we broke through 2380, I said, oh, who knows what's going to happen here? We might test this support. We might test here. What happened? We had a red dog reversal. So if you remember, here we went long, had a nice day-and-a-half snap, and then from there we switched to stocks, considering that we took back this 2380 and it proved that the sellers had no power. So lo and behold, here we are above the prior highs here still, so still showing commitment in the spiders or in the S&P, but not much elsewhere. So hard to stomach it by itself. So anyway, look at the size of this range from the low, which was 2403, back up into this spot. So not the easiest thing to handle here. If you're long, you have a big travel range from the low, and if you're short, you have to think about why is the spiders or the S&P still, how many handles? This is 2415, I think. Where did we close? No, we closed 2410, 8 handles off the highs. So anyway, look where the S&P is, and then look at the chart of the XLF. Gross. The XLF, this hasn't triggered yet, and the head and shoulders pattern is only a head and shoulders pattern when the neckline breaks. But here we are again, where you're still caught here below the 50-day, looking like we're rolling down again. And if this were to break, I don't think you'd want to be long the XLF. Here's your 200-day. But then you also why wouldn't this break that when Goldman is already on the 200-day, below every moving average? Typically, that's not a healthy sign. JP Morgan did the same thing. Okay, broke below its own neckline. So, I'm not sure what's holding up the XLF, but all these names that are pretty important to me are below the 8, the 21-day, and the 50-day. Okay, so this head and shoulders top pattern is pretty apparent, but, not really adding too much fear in the market. And then if you go to the IWM also, IWM, didn't break below this spot yet or didn't get back, quite down there, but still trapped here. Okay, you have the S&P all the way up here. You have the Russell testing macro support, where you would think if the S&P were to break down or give way, this would break, and that would be leading us down to the 200-day. So, hard to really handle what's happening there. Then you have the IBB that rallied today, but look at the IBB. The IBB, basically broke this key support area. Did they do it just to get stops out? Maybe. If you got out when it failed here, Okay, maybe you got involved for a little red dog reversal. What's a red dog reversal? This is a great explanation of it. Okay, basically the IBB was here, right? It was at 293, went all the way with a low of 83. That's 10 points lower. So if there was going to be a fourth day, what does it have to do? Get below the third day, stay below it, and continue. If there's going to be a bounce back, it's got to trade below this 283, put a low in at 282.60, come back up. And then for those of you who sold here and said, I want to play a little bit of a bounce, you buy here, you put your stop there, then all of a sudden you have 285 and change. You made $3 with a dollar risk. And then sometimes what people will do with the red dog reversal on the 200-day, you take it a little bit home, then maybe you retest this broken support that if the bears have any control, they would negate that there or they would sell it there. Or you just do a day trade and say, hey, this is a broken sector, it's below the 8 and the 21 and the 50-day. Yes, we hold the 200-day the first time here, but typically you play around with it a little bit. I don't want to be stuck just in case. So anyway, those are the sectors. As far as stocks, I started buying Apple thinking they would, mark it up, et cetera, and they did not. It opened up, like 40 cents, and then quickly reversed. When it went red, I kind of sold it, or I sold it when it went underneath this spot. This was one stop for me. This was 153.33. Okay, came off the lows, but right now this is still laggard. Okay, not leading the tape. I like when Apple leads the tape, so that's why I'm not buying a dip yet. Because what happens if the market does correct a little bit? Perhaps it could see the 21-day, or even lower. And we're still waiting to see what's going to go on with the iPhone 8. We don't know whether or not it's coming out in September or not. Amazon, wow, what a move. I was long it pre-market. It went to 1,000 again. Couldn't hold it. When it went red, I sold it, thinking I was a champ, right? It went red, went down another 15. I wasn't expecting for it to get to the 8-day. If I was expecting that kind of move, I probably would have had some bids there in my swing account. Got there, came off of it. So I'll tell you, if they open up above 1,000 and run it tomorrow, there's going to be a lot of active guys that got stopped out within here that probably are a little upset. Or if you got stopped out when it went below 995, right, you then had the luxury, this is what we talk about, if you have high-level stops, you get to test lower levels. Well, Amazon was one of those situations. Look at it closer. It opened up here. When it went below 995, okay, in order to go lower, it's got to get below this low. In order to go lower, it's got to get below that low. So if you use your stop here, okay, maybe you tried it here, it didn't work, and then maybe you said, hey, I'll give it to the 8-day, and then basically it bounced off it, and then you saw like $14 off of that area. So again, there are lots of ways to actively maneuver these things, and now it's pretty loose and wide here. I think the most frustrating scenario would be for it to open up like at 1,002 tomorrow and got everyone out and then run, because no one like me will be buying it back. I'll be like, all right, it's going to go without me. Better to pack and fill again, a little bit, but we'll see. Facebook, had some good sales also, and then, reduced once it went red and then a little bit lower. This was, when we talked about the buy spot, okay, then, it actually just looks fine. You just have an engulfing candle here, so that's what got me out. Here is your little red dog reversal to the downside. What's a red dog reversal? You guys all know what that is. That is when you get above a momentum level, like right here. This was the level, 151.97. Went as high as 150. No, sorry, 150. What is that? 152.90. Went as high as 153.35. So it pushed through. And I remember All Access, I'm like, I'm selling some Facebook, feeling really good. Then all of a sudden I get distracted, I come back and it's already almost flat. And then I think most guys got stopped out when it broke this 151.64. If you're still in it, let's see the 8-day hold. Sometimes the 21-day gets tested, but all in all, it was a lot cleaner. This was your nice buy, gave you some follow through. Remember, we were buying versus the dip, and then again, you get a little bit of a sell signal. Sometimes it means nothing. Sometimes it's just a pause, but sometimes it's good if you reduce because you don't know what's happening thereafter. Some might even say it's a lower high compared to this. But anyway, we shall see. So with all that said, you definitely have some sectors that are giving some signs that, the market's fatigued, whether it's the small caps lagging and, maybe testing macro levels, the banks that have been lagging, the bios that have been lagging, oil that's been lagging. I guess, where money's hiding? Here you go, Triple M. You want to see Triple M? I bet you're not trading that thing, but this is where money's hiding right now, because it's not hiding in Goldman Sachs or the banks. Yeah, look at Triple M. Boom. Okay, I guess it's highly weighted, and I wish I traded this for a breakout, but that's why sometimes a chart's a chart. Everyone's like, oh my God, how could you have traded Triple M? Well, you know what? Here's your red dog reversal. Took back this 194.72, came up, little bull flag above the 8-day, and then took out the prior pivot, and now look at it. Doesn't matter what the name of the stock is, just look at the chart and use your tactics. But anyway, lots of reasons why the spiders came back at the end of the day is because stocks like this, are still extending, and these are highly, heavily weighted in some of those indices. But those aren't typically the names that are on my go-to list. But I was looking around saying, what's rallying? Because everything I'm looking at doesn't look like a compelling long where there's an edge there. And everyone's like, oh, look at Triple M, look at McDonald's. Let me see what McDonald's looks like. Ah, look at McDonald's. Damn. Big gap up. Traded above this, and look at McDonald's above the 8-day moving average this entire way. And I haven't heard one person talk about it. But that's where some money's hiding. So in conclusion, I hope you didn't get too beat up. This is the type of day that stops out uncommitted longs, and then sometimes, you wait and you get calculated, like I shorted a rally in the spiders, and basically grind it up into the end of the day. And unfortunately, I'm still a little short spiders overnight, and I'm flat-footed equity. So tomorrow, hopefully, we're not gapped up huge. That'll be probably my most frustrating open. I'd like to see us down a little bit, cover some of the spiders, and then figure out if some of these charts could rebuild, or, do we get into a little bit more choppy corrective phase, which has yet to be seen. Have a great night. I'll see you tomorrow morning with Jennifer J. I hope you liked her. She's great. She's going to be on the Morning Call Express a few days a week with us. She's going to add a little spice. She's going to bring a different perspective, and it will make the Morning Call Express much more informative and fun. See you there tomorrow. Bye-bye.